Hi guys, welcome back to the channel. It's Ryan with Degenerate Passive Income coming to you January 2nd on a Friday evening, 2026. The new year is here, ladies and gentlemen. I'm excited about it. I know everyone's down and out about crypto. It's like, oh, Bitcoin's 89,000, sub $3,000 ETH, all this other stuff. And, you're not wrong. There's not a lot of things going on in the crypto, but we adapt, we build, and we trudge forward. I mean, that's what we do here in anything that's been under the EMP umbrella, obviously. And I'm excited. I'm still excited about the space. I say it gets boring once in a while. I try to diversify into other things while I'm watching charts go sideways or huge buys, huge sells, and kind of like doing nothing. But I'm excited. I'm excited about new opportunities. I'm excited to bring you to have Graham, aka Grover321 in the Telegram, or Furry Blue Me on all my lives. He's the one explaining things via chat better than I can ever do live or anywhere else. So we're going to talk about LSteak and the opportunity that's coming. It's still in pre-launch, ladies and gentlemen. None of this is financial advice, obviously. It's an opportunity because it's going to help the TVL of Bernard Bonds, which helps the TVL of DexFi, in which it goes around the whole ecosystem. This is what I love. So if you guys have any questions, please reach out and type them in the chat. That is what we're here for. So we're just going to talk about LSteak and go over that, and we'll go over the pre-launch opportunity because there is some benefits of getting in the next week. Okay, so we're going to talk about that as well. So yeah, first of all, Graham, I know you're a busy guy. Thank you for joining me this evening.
Not a problem. Not a problem. Thank you for having me on. It's been an interesting one. I'm a bit tired this morning because my partner's birthday was yesterday, and we were in Brisbane till early hours of the morning. But hey, we keep on moving.
Yes, that happens.
And I also do happen to agree with you with the market. I mean, it is boring at the moment, but then history also shows that Christmas, New Year's is generally a boring period of time because the retail side isn't generally trading.
Right. I mean, everything is sideways. If there's any big buys, it's automatically going down if anybody's even watching. We got 90,000, a little bit of creep up in Bitcoin today. I mean, some is better. I mean, $3,100 ETH, that's good. It's been 2,900. So I mean, that's going sideways too. So hopefully we can start the bull. I'm not going to, speculate on when the bull starts. In my opinion, February, March, maybe. I don't know that. Maybe it's never coming. Maybe give your thoughts on that, Graham, before we really get into LSteak.
Well, in regards to the market, I believe historically we see an uptake after New Year's. People start going online. They've made New Year's resolutions that they're going to do things like invest more in crypto and all these types of things. So historically, we see a bit more of an uptake after New Year's. But I agree. I think we're looking at probably around about a February start of the bull run. And the reason that I'm saying that is we've got institutions in there now, and they are manipulating. Even though market manipulation is supposed to be not something that people do, they do manipulate the market. And let's be real, institutions are never going to want to lose money. So they will manipulate it in a way that helps them and helps their stock holders. So they will maintain price at a good accumulation phase until they feel they've got enough, and then start really pumping the market for their own good.
Right. Yeah. I mean, February would be awesome too. Anything that I could see up and to the right, even weekly is good. I'm just sick of huge buys, massive dumps. And it's just like, it's all manipulation. It's just getting really boring.
And again, I mean, institutions, they while they do love a certain amount of volatility, they don't like too much. So they're manipulating the markets to make it do what they want because they've got the funds that they can. I mean, right. they're multiple whales with multiple amounts of millions being able to go, well, I want to get in lower, so I'll, and so on.
Right. So, exactly. Yeah. So, I mean, in the meantime, we have everybody knows under the EMP umbrella, we've got EMP Fusion, we've got DexFi, we've got DexFi Treasury bonds, we've got what else? We've got Bernard bonds, obviously. We've got some white label services. We've got Plasm, obviously. I know Joseph Pergram in the chat is all about Plasm. He's got 8 posts are hit about it. So hey, Plasm is going up. The buy, burn, and build is working. I'm excited about that, and we're going to talk about how LSteak is going to have a direct effect on that as well, guys. So I mean, there are things happening in the background that are going to boost our bags. So I mean, without we need to talk about LSteak and what it's all about, Graham. So just in case we have a newcomer here, let's talk about what it is, what it's all about, where the idea is from, and are we like when Lambo? Like, what's up?
Well, first of all, I'd like to say LSteak is a project that's it's a fully backed liquid staking project that's designed so that it'll grow in its intrinsic or base value over time through the yield of Bernard bonds, burns, and also a market routing that takes advantage of market conditions and differences in trading price and backing value of the token. So in sideways and poor markets, it's designed to continue to grow, albeit at a much slower rate in adverse conditions. It's designed to be able to be a project where you can invest your money and know that it's going to be it's hard to say safe in crypto because nothing's ever safe in crypto, but be there safe and earning you money in a liquid form so you can sell it at any stage. That, I suppose, is LSteak in a very, very concise manner.
Right. Yeah, because I know there's like a light paper out there that's that people can read, and I know I read the original one that was like 100 and some pages long, so it's very detailed.
The white paper is massive, and like still can't quite complete that until development has finished, because there are still things that need to be tweaked to enable development to happen how the project needs to go. Once that's all nailed down, I can have the actual full white paper, which again isn't going to be a short read. Out and available for everyone that wants to go for a deep dive of it. The white paper, the light paper, is available on the site there. That is much more concise. It's only about 20 pages long and doesn't go as technical as the white paper will.
Right. Yeah. I've read the light paper. I mean, everybody knows how smart I am. Not very is the answer to that, but I understand it. But I always like to have these AMAs. We're going to hold these AMAs weekly, guys. Okay, we're not going just like we do for DexFi and Bernard bonds and Treasury bonds, everything else. It's going to be a weekly thing because when I believe in a project, I believe in it, and I'm willing to take the time to bring it to people that follow me. And you guys are here for a reason. We're all here for a reason, is to make some sort of passive income, obviously, and that's why we're here. So how does a person get into LSteak, Graham, and like what do we get for our hard-earned USDC on base?
For your hard-earned USDC on base, well, what you get for an initial investment, right? What you basically have to do is you've got to have $500 initial investment minimum. All right, we've kept it at that level because it's low enough for your average investor to get in, and also high enough to filter out the Jeeps, really.
Right.
Because if LSteak isn't designed to be and it's not designed to have an exciting chart. It's designed to be basically up and to the right consistently, not your pump and dump chart that you see with meme coins and so forth.
Right.
That's what it really is. It's a project that's designed to be consistent. The tortoise and hare scenario. It keeps on plodding along while all of the other coins are pumping and dumping and pumping and dumping and causing everyone else stress. And over time, it just ends up being the winner.
Right. And so, yeah, right now, guys, we're talking about the $500 minimum to get into pre-launch. Maybe we should talk about the pre-launch sum, Graham. Like, what's the expected actual launch date? Where is this pre-launch money going? What kind of goals do we need to meet, and things of that nature?
I think I've lost you for a second. Oh, there we are. Right. So with the pre-launch, those $500, right? So that gets that helps provide two things: the initial liquidity to enable trade and to help reduce volatility, and it also produces the funds for the yield engine. Right, because all of the liquidity has to have the tokens, and all tokens are backed. Therefore, it also creates that initial TVL for the yield engine of LSteak. When you invest with $500, it's split up. You get 20% of that $500 in pure LSteak for you to either hold as LSteak or continue on into the extra layer to take advantage of the boost that gives. The remaining 80% goes into bootstrap liquidity, right? And the bootstrap liquidity pairs Ethereum and LSteak, and LSteak and the extra layer token, right? And they are split at a 2/3, 1/3 ratio. So 2/3 is the primary pair, and 1/3 is the secondary pair. For anyone that invests, this gives you exposure just on the liquidity side to LSteak and to XLSteak. There.
Oh, we lost you for a second there, Graham. 1 second.
Oh, are we back?
Oh, there you are.
There I am. As I was saying, which Ethereum is a market stabilizing factor to the liquidity, as it's one of the big two. With your liquidity provision, you are actually able to then earn yield off your liquidity provision, which no one that gets in at market launch has the opportunity to get. You will be earning 80% of the yield of those LPs, right? And 15% is compounded back into that liquidity provision, so your actual position will increase, and 5% goes towards burning LSteak and contracting supply, increasing the backing per token. And also, as an added bonus, while the early bird special is on, it's at 5%. You get 5% of the value of your liquidity provision provided back as an extra thank you of tokens in LSteak for your investment. The liquidity bootstrap is held for 3 months. You can't withdraw it for 3 months. This is done to enable the ecosystem to stabilize and to grow its own TVL and project own liquidity. After that, the bootstrap liquidity is released on a growth system. The reason it is done like this is most bootstrap liquidity, they get to their period where it's held, and then everyone can basically exit their liquidity, and you get what's known as liquidity shock, where all of a sudden the tiniest of sells cause the price to dump. So how I've organized it to happen is the liquidity release is based upon how rapidly the POL is increasing. So each month, a minimum of 50% of the increase, the value of the increase in POL is released at a first comes, first served basis to be able to be claimed by the bootstrap liquidity providers until their share of the liquidity has been removed. So that's basically what you're getting for entering a pre-launch. The early bird special ends on the 9th. There will be no extension on that now. So if you wish to get the full 5% bonus on your liquidity provision, you'll need to get in before then. After that, it goes back to 2.5% bonus on the liquidity provision side of your investment. Does that about cover it all, or is there anything else that you think I need to add there?
Yeah, I think so. $500, you pretty much you're going to get 20% back automatically at launch in LSteak, correct?
That's correct. So there's $100 there worth of LSteak at launch that you can then utilize however you see fit.
Okay, and what will the price of it be at launch approximately?
It will be at $1 with to make launch easier and setting up all the LPs and so forth easier. It will be at $1 launch. So one LSteak will be $1 worth of backing. That way, the maths are easier, and then after that, the actual price of the backing is dependent upon the number of tokens and the TVL behind it. Again, 100% backed. You can do the numbers yourself. The backing of LSteak is the effective supply. The total value of the backing divided by the effective supply, which gives you the number, basically, which will continue to go up as you're compounding the yield in there and burning tokens to reduce the number of tokens and increase the relative backing.
Okay. And that, so the extra 5% rebate that ends a week from today, right? And this is going to go on until launch, correct?
The 2.5% then, the early bird finishes at the 9th, which is in a week, and then it goes back to the 2.5% bonus on your liquidity provision, and that will continue on until launch, or until audits are just about completed.
Right. Okay. And so now I'm going to ask the hard question because I've been a part of some of these protocols before. What is there? Is there something put into place? Because I've gotten into some protocols, and all of a sudden, oh yeah, we start off at $1, it goes to $10, and then all of a sudden, you know what? The bottom falls out of the sky, and the token is like worth absolutely nothing. Is there some kind of dump prevention, whatever you would want to call that?
The entire system is designed to take advantage of sells and designed to take advantage of those situations, right? Okay. Because the backing is never removed unless there's an emergency system trigger distributed to all holders proportional to their holdings. Because of that, the actual backing value of the token never goes down, right? It's fixed. I mean, like it's basically like $1 of LSteak. It has $1 of backing behind it. It's always there. Exit is done through liquidity, which does mean that the market price can go down, which is when the systems kick in. Right, this is when the routing and burn and liquidity provisions systems kick in. Right, when market price is lower than the backing price of LSteak, this is when entries are routed through market buys. Right, this then brings up the market price of the token. Market price of LSteak, but on top of that, because of the routing, it enables us to give you better than the market condition than a market buy, particularly early on while liquidity is low and there is going to be some volatility. And it then takes some of those extra tokens you would get because the price is lower, right? And burns them, reducing supply, increasing your backing per token. You still end up with more than what you actually would get on a market buy because of how the zones are set up, and it helps bring back the systems to parity, and while increasing your backing at the same time. If the token's trading above market price, a similar system happens, right? Except a portion of what the difference between a market buy and a mint entry would be is turned into protocol-owned liquidity, increasing liquidity depth and helping reduce volatility. So market conditions and market selling and buying actually helps strengthen the system, because when it's outside of parity, it's actually got systems going to help boost and strengthen the system as it goes along.
Okay, so pretty much, kind of what you're saying is it's kind of Jeep proof, because there's Jeeps everywhere.
There's Jeeps everywhere, but I mean, like, in all honesty, when you think about it, to get into to get in at a bargain price, the price is already lower, right? And then to get out, you're not going to try and Jeep the system. You're actually not going to end up better off. It's intrinsically designed for you to get in, hold for a while, and then sell as you need. Right? It really isn't the type of project where you're going to go in, you're going to see 200% 2 times and then jump out. It's a project where you go in, you've got your funds, that have got backing at all times, and that backing of the token is always increasing, right? So the longer you leave it there, the better off you are. If you're trying to jump in and jump out, you're not really going to benefit that much. And in all honesty, if you had $1 of gold, right, why would you sell it for 95 cents?
Well, I asked the same question, Graham, but I've seen it. I mean, I even see it in Plasm. People dump it for losses, and I'm like, what are you doing?
But again, Plasm is a different designed system. The difference, it's a different design system. Plasm is designed to be able to have those really, really, really attractive yields. And as a result, to be able to get those really, really attractive yields, you've got to play the system. You've got to play the game, and you've got to stay playing the game for a while. LSteak is designed so you can be boring, right? You can go, here's my money, leave it there. Know that you're not going to be worse off than the markets. You're going to be better off than the market. So you're going to be better off than holding it in Bitcoin or Ethereum or whatever. And you can exit at any time and know that you will.
Right. So I mean, this is what attracts me to that, because I don't like having to come back once a day or once a week. And this is the only reason why I didn't do like a stake in Plasm 30 days in a row, and now every day, when the first 30 is up, I have to go back and do something
like that. And that's what a lot of people have done, because it is the way to be able to get the most out of Plasm.
Right.
Get the most out of Plasm. You really want to be doing a stake every day until your first 77 days are up, and then you want to be compounding every day after that. And that's how you really win with Plasm.
Right.
This is something where you can go, okay, I've just put something, I've put money in, and I know that's the system's going to look after it. You can look through, everything is on chain, everything is there available for you to look at, fully doxed, fully transparent, and you can see that its backing's going up. And when you need funds and need to remove funds, you know that you're going to be removing them. Even if you had to do it in the shittiest of markets of all time, you're going to be better off than the market.
Right. And maybe we should talk about that backing, because there is, obviously we've got the Bernard bonds, 80% of, say a person puts $100, a minimum of 80% goes into the Bernard bonds, right? To earn yield.
Right. That's right. Then you'll have a maximum of 15% will be put into the hedge, which at the moment is Bitcoin, Ethereum, and gold. All right. Due to programming constraints, we've had to change it from PAX-G to XAUT, which is just the Tether's version of gold instead of Paxos's version of gold. Functionally wise and anything like that, it's no different, just makes it a lot easier for programming. In the future, where you will be looking to bring in silver, that won't be immediately at launch, that will be further down the track. And also further down the track to help hedge against yield loss from bonds yield going down. Stable coin farms will be brought into the hedge, and blue chip coin farms will be brought into the hedge to have a hedge yield bearing assets in there as well.
Okay, so every single thing you talk about this, Graham, can be seen on like DBank or some sort of thing, right?
Yep, on DBank, the contracts and wallets will all have links on the site for you to be able to go and see live on chain what is happening. I mean, there you will have a link on DBank that will take you to the Bernard Bonds holdings. You'll have a link on Bank that will take you to the hedge fund holdings, and you will be able to see exactly where they are, what amounts, and what's happening with it. All contracts will be made available with either links or their contract addresses made fully public. No black boxes with what's happening behind the scenes. You can have a look and see all the math and all the funds doing what they're supposed to be doing.
This is why I'm excited about it, because it's going to be exactly like Bernard Bonds and DexFi treasury bonds, and obviously all the vaults. You can see exactly what's happening everywhere, ladies and gentlemen. This is what the space needs. This is what the space wants. And I won't talk about anything else unless it's like that, because I've been rugged so many times, and I know Graham has too, and everybody else involved in any of the building of this stuff. We've all been rugged. And if you can't see where stuff is, and you can't go and ask the dev or the owner of the protocol, if you can't see them live on camera once a week and ask questions to the Telegram group, I don't want nothing to do with it, because I trust nobody unless I can talk to them. I can see where the money's at, how it's being used, as far as the bullets and like that. And this is what I love. This is what I love about LSteak, because it's something new, it's something different, and it's only going to help the whole ecosystem. Like I said earlier, snowball the ecosystem down the road, because it's helping Bernard Bonds, which is helping DexFi, which is helping EMP. How is it? Maybe we should talk about that, Graham. What does Plasm and eShare have to do? Because I know there's liquid staking as a service.
That's right. Okay. Yeah. Well, liquid staking right. Okay. We can move into the liquid staking as a service. Right. When designing this, I was looking at it and going, well, how can we make this something that's going to really expand and really grow? And I've looked at it, and I've seen that the extra layer, a liquid staking portion of the LSteak system, can then be siloed and sold as a liquid staking product to any project. So that means Plasm, eShare, any project that wished to give their token an immediate use case of a liquid staking derivative that earns yield, can jump on board, and as a result, LSteak, the project, for providing that service, gets a cut of their yield and of their going into the yield engine. So that's how it helps LSteak. How it helps a partner project. All right. Now let's start off with Joseph's Plasm, Maxi. So let's start off with Plasm. First thing that this enables is that it gives Plasm a secondary use case, rather than just having to go back into rather than either just holding it or going back into the system. So Your concern at the moment, if your concern at the moment is how high the contribution percentage is for restaking, you can then go, okay, well, I'll hold that plasm as a liquid stake in the LSteak system. All right. So what it then does is you take your plasm, it then converts the value that your plasm represents into the yield engine, and then further into the extra layer plasm token. That's redemption ratio of that token then increases due to the same mechanics as LSteak. Means while you're waiting, that one plasm's turning into 1.1, 1.2, 1.3, 1.4 plasm. It's sitting there working for you while it's parked, and you can then at a later stage go, cool, it's now a good time for me to go back into plasm and compound it. All right. Giving you that extra yield engine while you're waiting instead of just leaving it there sitting in your wallet. Right. The second thing that it does is it provides buy pressure, a constant buy pressure on plasm. Right. Not only just from the entries, not from anyone just going straight into the stake, but also from the constant buys that are necessary to compound that yield into the liquid stake derivative. Because the yield from bonds is in USDC, it has to then buy the plasm off the market to put that into the backing of the liquid stake. And because an LSAS partner doesn't need to split the yield as much, it can have a much larger portion of the yield of its operating engine allocated to boosting that redemption ratio, and hence the buy pressure is a reasonable amount, and it's a consistent everyday ticking buying pressure, just like the buying burns are with plasm.
Okay.
Thirdly, it also gives an exit route that doesn't directly put sell pressure on plasm. Right. It then enables an exit route for the plasm to be routed out through to Ethereum that doesn't affect the primary plasm LP, and doesn't affect the primary eShare LP. So you are able to exit funds without affecting the primary price of plasm. Now, LSteak has protection. LSteak has protection systems in place where it will automatically stop routing if it starts to adversely affect the price of LSteaking of LSteak. You there?
Yep, got ya.
Sorry, it went all quiet for a minute. I was thinking, does that make sense, or do I need to clarify that a little bit more?
So if I understand correctly, I can park. Say, I think I've got 60 days left on my my two massive plasm stakes, or my stakes. So if 60 days from now comes up and we're launched or whatever, if I thought I'm not going to do it because I've already promised that I am compounding with fresh ETH for 5 cycles. But if I were to be like, I just can't come up with another ETH to contribute, I could go over and take my plasm on the LSteak site and stake it there.
That's correct. You've got your plasm in your wallet because you've claimed your finished stake. Okay. And then you can go to the LSteak site and go to the portion that will be dedicated to the plasm LSteak, and stake your plasm, and most, if not all, of the value of plasm will be able to be transferred into the yield engine, and all of those, all except for a small amount of slippage, will then be able to be staked in the extra layer plasm.
Okay, so all that plasm that would go to LSteak, is that where the 80% would go into Bernard bonds again, or
how that then goes is, for example, if you've got a K of 1K worth of plasma.
Okay.
Right? That is then split at the same ratios as the primary, as the LSteak one, because it still uses the same engine mechanics. Right?
Okay.
Where a minimum of 80% will go into bonds, 15%, a maximum of 15% will go into hedge. 5% cuts is what's the LSteak takes, right? That is then splits 50% going to increase the LSteak backing, right? 45% of that goes towards increasing LSteak liquidity, and then 5% goes to operational costs.
Okay.
All right, you're still getting the full value minus a little bit of slippage, as happens with in any market conditions, and those $1,000 worth you get in the extra layer. Then that extra layer token is increasing its redemption ratio, and over time, those $1,000 worth of plasm will go to 1,100, 1,200 worth, however fast the redemption rate increases. And then after that, you can redeem them for the plasm. And if you've now got the funds to be able to restake into plasm, you can then go back into plasm.
Okay, and none of those steps affect the price of plasm that's on the market on DexScreener, correct?
That's it doesn't, because of how it has to transfer the value of plasm into the yield engine. There will be how it does that is it has to mint LSteak to get the value of that plasm into the yield engine. So first it uses those plasm. So it does have to sell first to get into the LSteak engine. It gives LSteak. Those LSteak are then sold again and buy back plasm. So there will be a rapid up-down movement on the charts with a slight with some slippage. If slippage becomes excess, it doesn't transfer the value into the yield engine. It just straight stakes it into the extra layer.
Okay.
All right, so that way, so any investor is not losing anything more than acceptable slippage.
Okay, perfect. Yeah, I just wanted to make sure that wasn't gonna annihilate the price of plasm, or something like that.
There'll be like a half a second tick up and down. There'll be a wick on the charts when it goes in, and that's and even then, as liquidity increases, those wicks will reduce in size.
Okay. I mean, I understand. See, I didn't know that part before, so I wasn't listening before, but I had no idea that we could take our plasm and not that I'm going to do it, because I've already promised everybody on the plasm side of things. I could take some of that plasma and be like, you know what? I don't want to contribute any more ETH or fresh ETH. I'm going to put some of this plasma. What kind of yield can we? I know you don't have a crystal ball, but what kind of yield do you think that would produce? Like if you staked, some of your plasma on for LSteak and XLSteak.
Baseline for any liquid stake for any liquid stake SAS partner and LSteak is always going to be the yield percentage of the bonds, or the yield engine. All right. Obviously, the TVL of the yield engine does affect how much how much value-wise that is, but the actual yield. For example, at the moment, the bond yields around about 30%. So the yield for LSteak and the yield for a extra layer LSteak for a liquid stake plasm will be at a similar or better rate.
Okay, so you could tell what you're getting now. Is that amount going to build up in your wallet like this number does on my bonds, or how does that work?
The extra layer, the stake, well, it would be XL Plasm, right? You have that in your wallets as a liquid token. You can sell it any time. Its value will be increasing because of the ratio is increasing. So you may have started off with one plasm in that with that XL plasm representing one plasm. With the yield and the burn mechanism and all the mechanics behind it, that then increases, right? So that's that XL plasm that you have in your one XL plasm you have in your wallet. Then when you redeem it, becomes worth 1.1 or 1.2, 1.3 as time goes on. So when you decide to take it out to restake it, you end up with more plasm than when you started. That's how the yield doesn't come directly to you as a drip or as a claim amount. It's put into the backing of the actual liquid stake. That's where you see, and because there's no mechanisms that allow that to be withdrawn, right? As in, it can't go back. The redemption ratio can't go backwards, because when you redeem, it redeems at the current rate, so that it doesn't cause the redemption rate to go down. Right? Over time, you will always end up with more plasm than when you started.
Okay. So
the actual dollar value will be dependent on how much plasm is, but you will always end up with more plasm than when you started.
Right. I mean, I think how everything is explained here, Graham, it's almost rug proof, or it's almost a bulletproof scenario. So what is the worst case scenario?
It's constantly testing it to try and make sure it is, and I'd love to say there is no scenario that it can die in, and I am looking for it, but it's designed to be. I designed it from the start for that in mind. I was so frustrated with the vast majority of projects being designed to go brilliantly in a bull market, and when things turn, that's it. It's over. Right. So I designed it. I approached it as an engineer. My original backing is I was actually going to be a structural engineer, so I've got that type of mindset. So I designed the base of it, figured out where it broke, fixed that. I tried to break it again, and continued to build it like that until I got to a stage where black swan events. Obviously, you will have you will have price drawdown due to whatever that happens to the market, but it won't destroy the system. It will put it into defensive mode, where it starts the burn mechanisms, it starts and all of those things to help build the strength in that scenario, so it rebounds harder. Or if it's deemed to be a big enough issue, right, the system can be paused, and worst case scenario, all backing can be liquidated and distributed back to the investors proportional to their holdings in LSteak, or even the partner projects.
Okay. So what you're saying, it is kind of rug proof. It is kind of bulletproof.
I mean, like, contracts have all contracts either have hard coded percentages, or percentages hard coded to only be able to be changed within certain areas. They have 72-hour cooldowns. They also have multi-signatures on them. No one person can withdraw funds and disappear. There is daily, weekly, and monthly limits on treasury spending. What else? I really have tried to make sure that that side of things is I'm doxed. You can see my face. I'm quite happy to. I'm quite happy for anyone that wishes to have a private call, a private contact with me. I'm quite happy to jump online or on and have a one-to-one conversation if that's what you desire. I've really tried to make it so that's all market conditions. It takes advantage of it and tries to either, if it's an adverse condition, strengthen the system so that when the rebound happens, it rebounds harder. Or if it's a positive market conditions, it's making the most of that to get it to be able to for an everyone win situation.
Okay. Yeah, I mean that's what I want to talk about. I know I'm focusing a little bit more on how the system works and the safety of it, because I mean people are worried about, because everyone's been through the the Bitnest and the PACA finance and everything else, and we just need top notch. Well, we should talk about that.
One good thing that is good to know is the Raise wallet, right? I cannot access those funds. The Raise wallet is in custody of EMP, right? It's not just me randomly holding a wallet. The Raise wallet is held in custody by EMP, which is AJ and the team, right? So again, if you're worried about where your Raise funds are potentially going to go or anything like that, that wallet is held in custody by EMP. So that's another safety layer that I wanted to make sure was in place, so that people have that ease of mind knowing that a solid team that's been around here for years is helping, because that's who I'm building it under, with custody and making sure that everyone's feels safe.
Right. And we should talk about that too. Who's the team building it? Grover and Graham, and who is who is doing the audits of all the contracts?
Okay. Well, obviously, I'm team lead in regards to getting LSteak happening. Right. There is also John, who's my partner in crime with most things. Right. He's there. I've got AJ. They're our three primary multi-sigs. We are considering two other multi-sigs to further spread further spread the risk.
Mm-hmm.
Okay, so that's the core three. Right. Development is being done by BuilderTech, BTT, which are the same people that built Plasm. They built what's the new not EarnFi,
FortuneFi.
FortuneFi, that's it. They built FortuneFi, and the auditors are 33 audits, right? Which are a mid to upper tier auditing company. They're a smaller company, and have very good history. They have no projects that they have audited have had hacks, and they have entered auditing competitions and found potential attack vectors that large companies such as Certic and the like missed.
Okay. Because I think that I just want to talk about that, because I think it's important. So
it is important. Yeah. We have got audits already. The auditors already lined up, and we have audit funds already set aside to be able to pay for it as soon as the contracts are completed.
Okay. And where are we at with development, Graham? As far as how are we looking?
With development, I've been powering along with that with Scott, who's the lead dev on this. He's an absolute legend. We get along well. We're at the stage where we've actually deployed on testnet, right? So we're testing all the code, finding those little niggling issues that happen when you do tests and so forth, and ironing out all of the bugs in the system, making sure everything's working correctly. At this point in time, we're on, I think it's our fourth deployment after a couple of bugs and unexpected interactions. This last one is looking like it's there are no unintended interactions. Once we have got the contracts completed, which at the rates we're looking really fast, where deployments is looking at this point in time and being mid-February. Devs being devs, I'll say probably late February, early March, because dev time always seems to be at a couple of weeks.
I get it. But I mean, there is no rush. I mean, we're better
there's
off.
No rush.
Yeah.
There's no rush. I also want to ensure that before, if needed, that we will extend launch a little bit, not extensively, if we still need to raise some more bootstrap liquidity, which at this point in time we're looking very good for the raise. The amount raised is now reached 29.5, I believe it is, or thereabouts.
Yep.
And that's on top of the angel investment. So the total raise is actually around about 62.5 or 60, around about 60 and a half as it stands, with 29.5 of that being on top of the angel investor. We've only had the raise going since the 5th of December. So it hasn't even been a month of raise, and we've nearly raised 30 grand, which obviously is an average of about $1,000 a day. And for the risk reward profile of the project, that is actually above the bell curve of adoption. High yields, meme coins, those types of things tend to have an adoption curve of large amount of investors jumping in. You see massive growth in the first short period of time, and then it dies right off, and you'll get a burst at the end before launch. Projects such as this, and it's been shown with other projects such as Lido, Rockets, and other liquid staking projects, they tend to have a lower adoption curve at the beginning, which starts to peak around about middle of the race, dips for a little while.
Are you there, Grover? Oh, we lost Graham. Oh, there he is.
With deployment expected being in February, we're looking at having, if it just stayed at this rate of investment, of having around about 100,000 K. 100,000, not 100,000 K. That would be awesome. Of about 100K of raise, not including some of the larger wallets that I know have just got some funds waiting to be cleared, and so forth. So at the moment, the raise for the risk reward profile of the project is ahead of the bell curve.
Okay, so you're happy where it's at right now?
I'm happy where it's. Obviously, I'd like it to be more. I'm not going to deny that. I mean, like, I don't think there's any projects developer in the world that would say no, it's enough.
Right.
But considering market conditions, where raise happened, which was just before on funds, market conditions are not the best at all. And the type of project, we're actually looking ahead of the bell curve for the raise. I am expecting an increase in investment in the coming weeks as people get back online and trading and start to be able to have funds to invest.
Right. And while we're at it, I think we should go and look at. I linked we should answer this question first. Joseph, our Plasm Maxi, he says, if we stake 1,000 Plasm and get more tokens, can we just claim the extra tokens we get so we don't have to pull our principal?
Okay. Not as in a claim button method. Right? It's not designed as that type of system. Liquid staking, the value of the token, or the redemption ratio, all liquid staking, including liquid staking Ethereum and those types of things, work the same way. The actual redemption of the token is where your yield is. So when you go and redeem those tokens, you get more back. That being said, however, there is no minimum amount that you could redeem. So, for example, if you went in with 1,000 plasm and they're worth $1,000, right? Over time, that increases, and the actual value becomes 1,100 plasm and 1,000, and hence $1,100. Right? You can then redeem $100 worth of tokens. Right? You don't have to remove your initial or anything. You can redeem $1 of it. You can redeem a couple of cents or a couple of cents worth, or you could redeem it all for its plasm. That's the beauty of liquid staking. There's no there's no friction there at all to be able to take out or go in with what you want.
So it's not like a bond where you can't divide up a bond. It's either one bond.
Exactly. I suppose in a way it is extremely fractionalized bonds with a hedge.
Right.
Right. You can't go in and you can't sell $1 worth of a bond as it stands. You've got to redeem the whole lot, and then get hit by the 10% on top of that.
Right.
You can then go. Okay, I just need $100. I don't want the $1,000 worth that I got sitting there. I've got a bill to pay. I need $100.
Right.
Bam. You can no friction, no 48-hour waiting period, no anything like that. You can then go, I need that. It's then redeemed or sold on the market, and as quickly as you can get it off chain, you've got it in your wallet.
So everything will be instant via smart contract, right? There's no.
That's correct. There's no time periods or anything. As fast as a swap can happen, as you can get it into whatever you want.
Okay, perfect. Excellent. He says he understands. Okay, I think we should talk about, guys. I linked in the description. I linked the first words of the description is the Telegram group link to the pre-launch, and in that group is these handy little
handy dandy infographic.
Yes, and this makes total. Whoever, I don't know if you did these, Graham, but these are making sense to me.
I did them, but I will not. I won't take full credits. GPT certainly helped me, and it took me a little while to get GPT to actually get it right. Sometimes it can be stupid, especially if you're trying to explain some complex under the hood systems in a way that people can go, that's how it works.
Right, because I mean, we talk about it, and if you don't, you have to watch the video 2-3 times before you're like, oh, okay, things like that. So come to the group, guys. Join the group. Links in the description, and it's all here. It shows you how LSteak and XLSteak grow together.
Even made the group even better, even tidier, so that there are tabs, so you can actually click on the information tab, and it'll have all of the information that's posted in there now. Right, so that, and also there is a infographics a tab and a video tab, so that you can, instead of having to scroll back through all of the previous history, you can then find where things are. There are the topics, I believe, down the left-hand side where you've got it there.
Yeah. It's all here, guys. So go in there and check it out, please. Lots of good information, and do not hesitate to ask questions. Graham is in here all the time, answering questions.
All the time. I'm even willing to organize a one-on-one call if that's how you wish to discuss things. I'm fully transparent and want to let you know that I'm here for the long haul. this is something that's the reason I designed it is because I want a product that is that's a nice, slow and steady turtle product that I know I can just put my money in and take out whenever I need it, and I will be better off than the market.
Right. Exactly. Let's see, what else is there? I was just looking at these graphics. Yeah, so a lot of stuff in here to read, guys. It'll make sense when you look at it, because you could listen to us for 10 weeks in a row and it'd still be like, oh, what was that part again? So just join the Telegram group, please. Link is in the description. And ask questions if you need to. Take a look at all the graphics. Take a look at this page, because the original page is this right here. It explains a little bit, and then you click on the pre-launch investor access, and it gives you, if you guys are interested, it's $500 USDC base minimum. Copy paste this address and send your USDC base to that 500 minimum, whatever you want, and then you're going to want to DM Grover321, which is Graham right in front of us, the TX ID and the amount that you sent, and we'll make sure that you're on the spreadsheet.
Well, I mean, like, the spreadsheet automatically pulls the data from the chain. The DMs really is because I just want to have a double, more than one paper trail, so to speak. I want to ensure that yes, the chain info is there, and that's where the spreadsheet gets updated from. But I want to just have that extra bit of paper trail so that everyone knows that yes, theirs has been their deposit has been received and confirmed received, and so forth.
Right. And me as an early investor, Graham, will I have a separate dashboard that I can look at, or how does that work?
Where at the moment, that's the avenue that hasn't been set in stone at the moment, because of development costs. I don't want development costs to blow out.
Right.
I'm hoping that I can get that done so that you will have a separate dashboard where you can log in with your wallet. If development fund constraints prevent that, your yield will be airdropped to you, and if necessary, I will manually do up some the calculations and so forth. You will also have access to the contracts and wallets, etc., where all of those funds are available to be able to check on chain that everything is still all going as stated.
Right. Okay. So would you recommend, just because of that now, if someone wanted to get into pre-launch, would you recommend using a different wallet than the wallet you use if you wanted to just go into LSteak at launch? Or what are your thoughts on that?
At this point in time, with how development's going, I actually don't see a development fund blowout happening, and I do think we will have a landing page for pre-sale investors. I like to err on the side of caution with everything.
Right. Yeah.
I'd rather under promise and over deliver than over promise and deliver.
Right. Yes, 100%. And I mean, that's what I hope people appreciate. I hope you guys appreciate that too. What Graham is doing here, and the thought and the work he's going through to bring something like this.
Hang on.
Go ahead.
I think you just disappeared there for a second.
Oh. Is there what else do we need to touch on, Graham?
Well, it is. I mean, like, are there any questions in the chat? It is hard to answer questions if there aren't any questions, so to speak.
Yeah, I just Joseph had the one question. There isn't anything else. We only have 14 people watching. I mean, I don't get, a lot of Friday night. It's the holidays. I'm not expecting a ton of live viewers. I mean, usually we'll probably get 500-600 the next day or two, and hopefully they join the Telegram group and ask the questions then. So, I mean, that's what I kind of figured was going to happen. But I mean, like I said, guys, we're going to keep pounding these AMAs out. Whether we get 2 views or 1,000. It's good information to have. You can see, you know, the lead dev right in front of you and ask him questions, and, you know, docs and everything like that. And that's important to me, and it should be important to you as well, especially for you newcomers that are, you know, just getting rugged off of PACA and Bitnest and all this other stuff. So, but yeah, and don't be afraid to share to your friends, guys. Be, you know, hey, check this out. Might be something you want to look into. Have them hop on a live, or have them like Graham said, hey, I'm willing to do a one-on-one chat to see if you're a larger investor or whatever. He'll go one-on-one with a Zoom or a Google Meet and be like, hey, let's talk about it.
And one question just did pop up from Marvin. Will we stake eShares in the future? And can categorically say yes. Both eShare and Plasm are confirmed as the two LSAS partners already before we've launched, and will be up and running for staking within a couple of weeks of launch. And as soon as the LStakes portion is all ready to go, they will be brought out to be available to have staking through the LStake system.
Okay, so what does that mean? What does that mean, Graham? Because I have 140 eShare right here worth $1,700 that I'm just holding, hoping the eShare, you know, moons at some point. Are you saying I can stake this somewhere to earn a yield?
That means that you can then those 100 odd eShare into for the price to go up will turn into more eShare.
Okay, we lost you there. Can you say that one more time, Graham?
That means that those 100 odd eShare you can then stake in the liquid stake.
Okay.
Right? And over time, while you're waiting for the price to go up, you will end up with more eShare. So when it moons to at the heights, let's say that we mid this year we get the at the heights and we're at 2K, which would be brilliant. I mean, and so by that time you've got 150 eShare in there because of how it's because of the system. That's
right.
I mean, like, you're not going to complain about that, are you? I mean, like, if you just left it in your wallet, you've still got only 100 odd, and if you in the staking system, you come out with more, and you will come out with more. There is no systems where the actual tokens behind the extra layer can reduce.
Okay.
Right.
Okay.
The extra layer redemption ratio is an only up mechanism. Right. That's not magic money maths. That's or anything like that. That is simply because tokens are only ever minted at that redemption ratio. So or redeemed at that redemption ratio. So that does not affect it in any way by entering or exiting. Right. And you're constantly putting more eShare behind it. So there's more eShare for the same number of tokens in supply.
Okay, now I get it.
All right. So initially, if you put if you put those 100 eShare in, and it's a 1-to-1 ratio, so there'll be 100 L eShare, XL eShare, and there'll be 100 eShare backing behind it. All right. And down the track, let's say another 10 eShare have gone into the backing. There's now 110 eShare backing those same 100 tokens. So, so that one token is now worth 1.1 eShare, which is more than when you went in. There's no methods that are pulling that back, right? There's only mechanisms that increase that, because there is also burn mechanisms that mean that that are burning that are burning the extra layer tokens that are available on the market if there is any inconsistency in the market price and the backing ratio.
Okay. Now I understand. So we can do that with eShare, and we can do that with Plasm.
We can
If
do
you
that
just
with Ether, we can do that with Plasm, you could do that, you can do it with any token. That's the expansion level of it. And what project wouldn't like an immediate use case that gives you that gives you and that gives you constant buy pressure and enables your investors to be better off over time.
Right. Yeah, for sure. That makes sense. Okay.
Right.
Okay.
And in regards to Plasm, having both eShare and Plasm onboarded straight away, that means you've got eShare with an extra use case, and that's an extremely low supply token. So there, your supply demand metrics go up dramatically, because now you've got all of the you've got another project where you can use eShare in, right? And because there is buy pressure on eShare, that alone affects the price of Plasm, right? Compound having Plasm in the system as well, so you've got it's a really strong outlook for Plasm, because it's got eShare, which is the base token for Plasm, getting the advantages that LSteak gives it, and Plasm getting the advantages that LSteak gives it.
Exactly. Yeah. Now it's all coming together for me. I love it. I learn something new every time. Okay.
And I'm just trying to think of anything else that might be. Okay, I have had a couple of people express concerns that it appears that investment is slow, and I would like to go. Although I did touch on that earlier, I really would like to go over that again.
Sure.
The actual raise is more than what it appears on the site, simply because we haven't included the angel investments in that.
Right.
Right. So the actual raise is over 60,000 already. Right. We're only showing the non-angel investor raise, because I think that's fair. It's fair to show what is actually being raised. Again, this isn't a token where you're going to have jitters. You're not going to have your degens coming in looking for extraordinary returns over a short period. This is a low to moderate risk product designed to be to safely earn you a moderate yield over time. Right. I'm not promising massive APRs. Right. The APRs that you will get will be similar or better than the bonds. All right, because that's its base yield portion.
Okay.
Also, I have had asked, what happens if you get no interest after launch, no more funds coming in? Again, the system goes into preservation and strengthening mode. All right, it starts the internal transactions from compounding. They cause burning of tokens. They cause liquidity increase. All of these increase the strength of the project and how robust it is, so that when things turn, and in crypto, everything does do that. They turn on a dime. It's ready for it to take advantage. So things only slow down when the market and conditions are not ideal. They don't stop. The yield doesn't stop. It may reduce because of market conditions, but it doesn't stop. Backing doesn't. The relative backing of the token doesn't increase. It's always still 100%. It's 100% backed. Right. The redemption ratio can't go down. There are no mechanisms which allow the redemption ratio of the extra layer to go down. So all of these mean that even though in a adverse environment, obviously it's going to be very boring, but it's going to be very boring, but it's going to still be a very slow up and to the right condition.
I'm okay with boring as long as I'm making some kind of yield. I mean, you know, if it's going to be as is good or a hair bit better than
if
bonds.
the rest of the if the rest of the market's crapping the bed and you're still earning 10-20% and your capital's being preserved, you're laughing.
Exactly. I mean, we do have our degens here that want 1% a day. This isn't for you guys, okay? I mean,
like, I degens. I'm not saying we don't want degens, but I feel it should be a project that starts to get them walking down the path where they need to understand that you can't go chasing after degen yield all the time, because there will be a point where you will get rugged and end up getting wrecked.
Yeah.
This is the little trigger that I want out there going, hey, how about I put some aside in something that I know I'm going to have dry powder, because it is liquid. You can have it sitting there just ticking away for when you find that degen project that you wish to invest in, and you can quickly access it.
Right. Yeah. Yeah, I mean, I am a degen at heart, but I've just in the last year I've been like, you know what, if you guys watch my channel, I've got into a lot of different things, and everything since then has been, I mean, obviously nothing without the MP umbrella. First of all, I mean, that's very important to me. It should be important to you guys too. That AJ and team have been. I've been in with AJ for the last almost 5 years. He's never rugged me. He's never quit. He's never said, you know what, I'm done. Like we can't win. He always adapts. He continues to build, and he says it right in the videos. We might not make a ton of money, but you know what? We're never going to quit, and that's what's important.
The only time you fail is when you stop trying. Right?
Yes.
And we're not going to stop trying and pushing forwards, and that's the same here. I mean, like, and also, I mean, like, one of the other things I've had asked me is what's overheads looking like. I mean, like, that's something that investors want to know, and we're very lucky that the majority of the systems are already automated, so operational costs for the project are very low.
Mm-hmm.
They are very low. I mean, like, we're look, doing the numbers, we're $200 a day is my operational costs, which is nothing.
Right. And what does that entail, Graham? Just for the heck of it.
I mean, like, the angel investor has required me to be able to pay back in LSteak their investment, which I'm fine with. All right. So that covers debt costs, right, and also the operational costs, which are basically just site management costs. I mean, like, on top of that, there's it is as automated as possible, so that I mean, like, I don't need to go on every day to do something, or the administrative costs are minimal. It's designed so we can go from launch. There will be a period where the variable amounts, like, for example, how much is going towards bonds, how much is going towards hedge, and the splits of the yield will be fine-tuned, right? With the initial 3 months, we will be pushing towards maximizing TVL in the backing, because the higher the backing we get, the more yield we get, and also gearing towards POL increase. So the over and above operational costs, right? Money over and above operational costs for the initial 3 months will be funneled back into the system to make sure that we're on as good a standing as we can as quickly as possible.
Right. I mean, that's good stuff to know, and I'm glad you're transparent about that. I mean, and once the angel investor is paid back, well, then that's less money that the operational cost is going to be.
Then our operational costs drop dramatically.
Right.
Dramatically.
Right.
So and if income is increased, we will be increasing debt repayments so that we can get that monkey off the back as even quicker.
Exactly.
I mean,
I love that.
the ultimate goal is by the 3-month mark being at a stage where minimal, if any, debt to be left paid, minimal operational costs, and minimal interaction needed from administration.
Like you said, boring. That's we want boring.
Boring. I want slow and steady up and to the right.
That's what we want, guys, and you guys should appreciate that. I mean, all the the transparency and the honesty that that Graham is putting out here. So I mean, it's been almost an hour and a half, Graham. What anything else we need to touch on, or we're gonna do this again next week, guys. So don't worry. You can watch the video afterwards or rewatch it or whatever. Please like, comment, subscribe, whatever you need to do to get the word out as well. Do me that favor. But anything else we need to touch on, Graham, before we sign off?
I think I've touched on everything. I mean, like, I'm sure we'll come up with with more, and I'm sure other people will come with questions. But as I said, I mean, like, you can either contact me in any of the socials. I'm available most of the time, or if you want, we can schedule a one-on-one if that's what you feel you need to do to answer some questions before you make a decision on investing. I'm not pushing the investment. I mean, I highly recommend do your own research, look into it, see if the product fits. Right? I'm not going to try and hype anyone into making an investment. Right? Simply because I don't feel that that's the way to go with it.
Right. Exactly. Okay. Well, I think with that, Graham, we will call it a night. Thank you for taking the time. I know we're going to be talking, throughout after this and throughout the week and stuff, because we're always back and forth on things. And with that said, we're going to, like I said, we're going to do this next week. Me and Graham are both busy, so we it's not going to be, to start off with, guys, it's not going to be like a set evening every week, because I've got stuff going on, he's got stuff going on. But I'll always be at least like a 24-hour notice, be like, hey, it's going to be this night. So at least you guys know. But like I said, we don't get a lot of live viewers. Usually if it's people after they see the video, then they watch on their way to work or sitting when they go to bed or whatever. So that's that. So yeah, please like, comment, subscribe. Check out LSteak pre-launch. The 5% rebate ends a week from today, so next Friday. After that, it's only the 2.5% rebate. All the links are in the description, guys. Remember, if you decide to go in, DM Grover321 in the Telegram group. You'll see it. It's USDC base, and it's a $500 minimum. And I haven't even put mine in yet, so I'm getting my bags ready to go before the 9th. So that's going to be here in a few days. So I'm excited about that. And I think that's it. Graham, thank you so much for taking the time for me this week. And I hope everybody has a great rest of their Friday evening. Happy New Year, and we'll see you in the next one.
See you. And